Let's see. There we go. There we go. Yeah, Tim, we miss you, man. Yeah, let's go. Okay, here we go. Right, coming in now. Man,
Yeah, family.
what's up, family?
Up to
Ted, what's up in that market this week, man?
what, stocks or real estate? What we talking about? Opportunities everywhere.
Both. Talk to us.
Man, shit, man. But I tell you, as far as the stock market, motherfuckers need to be buying right now.
Bye.
Like, yeah, as far as the stock market, what I'm looking at, I'm looking at SPY, right? I believe that gaps are gonna get filled, but maybe not all the way. Just depends on the news that pops off, right? Um So what I'm looking at right now, I'm looking at Netflix. I see that there's a gap to fill at the $84 range, but I think Netflix, I think it's gonna honestly touch like 88, 89, just fill the gap a little bit, and I think we're gonna go to the moon with Netflix. And then as far as real estate, man, real estate, there's so many opportunities now, as we discussed last call, about the high sellers demand. So now it's just about being patient, and that's what people need to understand. Like real estate and the stock market is very different, right? There may not be opportunities in a specific state, so you may have to look elsewhere, right? And then also looking at property tax, looking at the rent roll. What are you going to be? What is the property initially going to be cash flowing, right? So just looking at in that perspective, right? There's opportunities everywhere, and oftentimes you'll hear in states like New Jersey, that where I'm currently at, you need to look into a different state. Why? Yeah, I understand that there's way better opportunity. Like you can buy something in Texas, you can have a freaking mansion for what you get into New Jersey, but when you look at the location, when you look at, hey, we're right next to Manhattan, right? There's still a lot of different ways to cash flow. It's just about how creative you are, with your with that financial hack, right? So
Yeah,
a financial hack real quick basically is, hey, look, I want to get this house. I understand that you're selling this property for 500,000, but I'm going to give you 520,000. I'll give you this much money up front right now, and then we'll sign a non-disclosure, and I'm gonna make sure, right, that my tenants that I bring into the property is gonna be paying you, right? And then the next goal, because the thing is, what the benefit is that you're getting a property, you're giving them over what they're asking for, but on top of that, you're not paying for that closing costs, you're not paying for the down payment, right? So you have benefits, and then on top of that, what you can do is literally take out the equity from that property and repeat the process, or you put it into an appreciation vehicle. This vehicle could look like credit, build your credit up even higher. All right, now let's get a better door. Let's get access to this property. Let's enter this tax bracket, because now we got assets, right? So there's so much opportunity out here, and I think it's very important to look at everything with a double perspective, right? Not just looking at things as a consumer. Damn, prices are going up. It's hard to get groceries. No, no, no. Now let me take advantage, because this economic time that we're in was compared to 2008's economic time. So as it was
yeah,
compared, you heard that people lost money, but you also heard that people got rich, right? And it's taking advantage of these opportunities that you see in the stock market and real estate market.
that's a great perspective, bro. Appreciate that, man. It's just I just feel like, bro, it's a lot of crazy stuff going on right now. KB was saying it earlier, like, just with our airports, TSA, what's really going on in Iran, Israel, debt. inflation, everything, bro. Man, it's just crazy times we in. But what we do know is when everybody is fearful, and like Ted said, we should be buying, slowly accumulating assets, right? Not going all in right now, but definitely nibbling away. Like we talked about last week, buying when SPX was around 7,000 was a little too high. But down here in the 6,400 range, that gives us a better Um, asymmetric risk with our dollar that we're trying to use, man. So yeah, bro, we just got to keep going, bro. The first quarter is almost over. First quarter is usually rocky. January, if we start out strong, February and March, we showed that last week. February and March usually be a little rough, right? And I feel like if you can make it out of February and March in the first quarter,
Mm.
you're gonna be straight. It's just like last year. Remember when the Trump tariff and the Liberation Day was in April, beginning of April? The people that didn't survive that, they weren't able to participate in none of the games for the rest of the year that we had because they gave up. So we just got to stay invested, keep grinding, and just keep going through it, bro. Keep refining our strategy, bro. It's like iron sharpening iron. When you got your sword, bro. I know Romulus, he's going to talk about this a little bit, but when you got your sword, you got to keep sharpening, man. And the way you keep sharpening, showing up every day, seeing what's going on, learning, and just going from there, man. But let's see, we got about like seven, six, seven more coming on, but we might as well. We about to just get going, man. I'm about to give him like a couple more minutes. KB, how everybody doing though? We hit the gym. How everybody doing?
Yeah, we hit the gym, made some dinner,
All right.
waiting for see if XPS gonna drop or not. Waiting for a headline.
Think it's going
Yeah,
lower?
I don't know, bro. I think I want it to be the bottom right here, but you never know.
Never know. Never
You
know.
said something at one of, I don't know if it was a live or a prior call, but it was basically someone that's in your network that basically told you how to make it out of your situation, right? How anyone can make it out of the situation. And that was being someone that lived next to a big city. You add into your repertoire. And then I believe you said the relationship aspect. And when you really correlate and put everything together, it makes sense because things that are being posted on the news, and we're being in fearful times. But say if that billionaire goes to that same country, right, brings the USD dollar over there, they're living in royalty. They're not in the mix, right? So everything is programmed to keep you in that fearful state, right?
Facts.
And then add into the repertoire, add in swords, being a well now what people are going to see in this society is that you must be a well-rounded entrepreneur.
Oh yeah.
You must be able to add to your repertoire, add to your repertoire, so you can get into different rooms and exchange value at a high level.
Oh yeah. I
That's
was
the
watching. I was watching. I forgot her name, but I'm gonna send a link in the chat. But Earn Your Leisure just interviewed her. She's like an AI architect. She's like the GOAT of doing AI, right? And she has said that being an entrepreneur is not going to be a luxury no more. Being an entrepreneur is going to be mandatory. Or
hmm
at least having an entrepreneur mindset, right? Of being able to take advantage of opportunities that come your way at all times, being able to put yourself in the best situation possible outside of your job or the infrastructure that you already under. And she was just saying that over the next 5 to 10 years, the world is not going to look the same. And we feel it now. I got people that call me all the time, like, bro, I'm still looking for a job. I've been looking for a job so long, I'm not even putting in applications no more. Right. So if you've done put in 100 applications and then you don't put in applications no more, what are you gonna do for money? What are you gonna do for money? And so that I think a lot of people are at that phase right now, just trying to figure it out. And that's what brings me back to the Creature of Jekyll Island, the book, when they talked about the universal basic income. I really do think that's a thing, man. I think it's coming. I think it'll be, I don't know when it's gonna come, but we're gonna have to do something for our people. Kind of just to, just to bail us out again, and that's what America do. bails itself out when it gets itself into positions that they don't want to be in. So yeah, man. With that being said, man, I'm gonna just have Keys and them get on as we go. But man, I want to bring up Romulus, man. Man, hedge fund manager. He has so much experience just in the market. Just that everything when it comes to charts, when it comes to understanding finance, right? From a low level to a high level, has I think it was over 50 million in the fund that he used to manage, man. So, man, just it's just crazy, bro. Crazy. So,
Hey,
please, man, please take it away, brother.
thank you very much, Nathan. It's good to see you in person in a way.
Sure.
And I'm looking forward to the day when you and I can sit down face to face. I genuinely am looking forward to that. And a couple of you, wait, hold on a minute. There's a few of the pictures that flipped. I don't know if you guys jumped in shared rooms or something, but I'm looking on the screen over here and maybe Nathan's playing tricks on old General Romulus. But thanks
Oh,
to everybody for having me on. I very much appreciate that. As Nathan mentioned a minute ago, I have been at this personal finance, financial markets, stocks, trading, and real estate as well for quite a while. I started my career at 67 Wall Street, the actual street itself, in 1994. So that was before probably all you guys were born. You can't even go to Wall Street anymore and start a career like that. There are no brokers, there are no banks left, and not a single one. There used to be thousands and thousands of really just young dumb guys, right, in their 20s. There were no women in the business back then. Just how it was. There was no females, but thousands of young guys, and you go out on Wall Street yourself any given day of the week, a Tuesday at 11:30, going to get lunch, and you couldn't move. The street was packed with people, all brokers, all look the same, dark suits, white shirts, dark ties, short hair, and running back to the office 20 minutes later, making our phone calls. A different world today. Now we're all doing it digitally like this. We're all getting together electronically, but it allows us, Nathan, to interact with people from all over the world and find a better, that's right, a better group of people because now we can find the best from all over the world and we can do it just like this. So
right.
again, grateful for the opportunity to get together here. And Nathan, maybe I will have a chance through the magic of Zoom and what you put together to show pictures of my charts, but a quick explanation of that because you guys were talking about SPY, you were talking about Netflix. One of you, I believe, was saying, "Hey, Netflix has a chance to maybe fill a gap at a certain price point, and then possibly go in a different direction from there, and maybe there's an opportunity." That's technical analysis 101. Gap filling and then bouncing from that, looking at price charts as opposed to analyzing fundamentals. We might be looking at cash flows and bank statements and treasury notes or sales channels. Those are all fundamental type of data points, and they work as well. That's how Warren Buffett doesn't know a chart if it hit him in the head, literally. Okay, and he's one of the greatest investors, long-term investors. But that's not what I've done. That's not how I came up. That's not what I cut my teeth on. It's not what I train under. It's not what I teach under. I do charts, technical analysis. I know the fundamentals, but the technicals is what I do. And therefore, that does make an interesting ability here through this video channel because I can show the charts and we can go through them and talk about them. And so we'll take an opportunity. We'll look at things like real estate because there was a conversation about that. And by the way, I'm from Jersey. That's my original stomping ground, closer to the
Okay.
airport up north a bit. But South Jersey, that's where I spent tons of my time. And during the summers, always wish I was back in South Jersey with a big fat Jersey sub in my hand and sitting on the beach looking for Snooki as she's running around. So big love for that area from me and my history back there. But as I mentioned, we'll look at real estate. Real estate, yes, geographically intense and dependent upon certain geographical areas, but there are broad trends. They're dependent in a lot of cases on interest rates, so we can look at that as well. Not just tonight. I do hope this is an opportunity, not just for what we're doing right now, but for a longer term relationship that we can continue to have conversations and help each other out. That's my hope. So, as I mentioned that, if you guys have any questions as we're discussing these issues, you have any thoughts, comments, or anything otherwise, just speak them in, or you can write them in, text me. Nathan, I'm sure we can share with everybody how we can communicate with each other and not just here alone, right? That would probably make the most sense. So with that, Nathan, how will I have an ability to share my screen?
Do you see it at the bottom there? It should
Yep,
be
yep, I
able
see
to
that button. So I'm going to hit that,
share. Yep.
and I'm going to hit the button on my chart,
Yeah.
and just let me know if you see a chart of Verizon.
Yep. We see it.
Oh, then you are with me, and therefore I am with you. How do we like that? I have the stock up here because I'm noticing here at the end of the day, I don't check. I have this in my retirement account. It's my longer term portfolio. I don't check stocks like this all the time, but I'm looking at it and kind of pretty happy the fact that this stock, this old stalwart, this bulwark of communications in America, is sitting just below a new high. And we notice that the S&P 500 is not. So part of the conversation that you guys were having before I jumped on here, or speaking with you guys, I was listening in, and we were talking about, hey, SPY was at 700. The S&P 500 was at 7,000 not long ago, hitting its all-time high in late January. You see that point right there, January 28th, and now it's 7.5% below that. Well, that sounds great. Let's buy it. Okay, and there were other points like that as well. Now, what I'm about to say does not reflect my analytical opinions or thoughts on where the direction of the S&P 500 or the broad market will probably go over the coming days, weeks, or months. Okay, I will get into that, but right now, I want to say that I lived through and traded through. Nathan mentioned I ran a fund. It had almost, actually, Nathan, the fund was at $59 million at its peak. And back in the day, I opened the first hedge fund in Indiana history, the state I live in right now. And I started that in 1999. So that was the dot-com bubble. That was the latter part of the bubble. And then, of course, there was a technology crash. And that took 2.5 years to work its way through. The reason I bring that up, so the S&P 500 was at some level. I don't remember off the top of my head, but let's say 7,000 was, that's the point it was at. And a year later, it was down about maybe 7%, about what it is now, 7.5% high to low. Was that a good place to buy it? Well, 6 months later, when it dropped another 7%, of course not. And then was that a good place? Now it's down 15%. Well, 6 months later, it was down another 10. And that didn't make sense. So now it's down 25. Altogether, it dropped almost 60% high to low. And the same thing happened in 2008. The S&P 500 dropped, well over half in 2008, the financial crisis. Point being, how do we know? How do we know 7% is enough, or 15, or 25, or 30, or 40, or 50? How do we know it's the place to get in? Because I do know this. If I'm buying S&P 500 at 7.5% below its all-time highs of a couple of months ago, right here at 6,500, give or take. And 6 months from now, it's at 5,000. I wish I never heard the word S&P 500. Okay. I wish I never heard the word stock market before. So we have to be really, really careful about just saying to ourselves, oh, it's lower than it was. And therefore I want to start buying. I want to start accumulating, or I want to add to my positions. Okay. That said, I'm not selling my Verizon or my Ford or my Pfizer or any of my retirement account stocks, which are all the same kind of things, big blue chip, dividend paying mamma jammas that I sell covered calls on every Monday morning. They expire every Friday, and I get my free money. Okay. I'm not selling any of those. Although the retirement account does have 25% in cash, has for a while. I'm not adding anything right now either. I'm of the analytical opinion, so we're going to get into that right now, that this is not, repeat, not going to turn into a 2001 or 2 dot-com crash. This is not going to turn into a financial crisis situation of 2008, early 2009, where we wake up 6 months or a year later and we say to ourselves, I wish I never heard of the stock market. I don't think it's going to be like that. Why do I think that? There's one guy in the White House who has probably all of the say about what is going to be happening here. And he knows markets, he knows business, he knows the importance to the American people of the financial markets, and he's paying very close attention to this. Right now, he's doing some other things, but there's a major election coming up in November. So I do believe that maybe not tomorrow, maybe not next week, maybe not even next month, although I wouldn't be surprised. But at some point, starting probably in the summer at the latest, and then going into early November when the election takes place, the stock market will be higher than it currently is, regardless of where it goes along the way. because it may go somewhat lower. In other words, I'm pretty much eliminating the idea that we are going to see a 30 or 40% smash over the next coming months. All right. And as again, any questions that you guys have, you can speak them in, write them in, or somehow grab my attention. Some issues, though, that we want to be careful about. These
I
yellow lines.
got a question,
Yeah,
Romulus.
please
This
jump
is
in.
this Caleb. My bad, man. I just got in from a networking event, man. Leaving town, so I had to come home and pack. But what makes you think, or what would be the determination of a black swan event that would make it drop that far? Or what are some indicators that we can start looking for?
Yeah, that's. I'm so glad you brought that up, Caleb. And by the way, you might be the hardest working man in showbiz because every time I talk to you, you are coming back from something or on your way to something.
Hey, man, that's the
I
name of the
know.
game.
Yeah, it's a beautiful thing. It's a beautiful thing. So, first of all, we don't need a black swan event to get an S&P 500 genuine normal bear market. If you think 2022, yes, inflation was high, but these things do happen. And the S&P dropped, I think, 22% high to low, and that was a bear market. Not a crazy one, but it was a bear market. Of course, COVID was black swanny. But when you talk to people like me, the grizzled, OGs, I guess, of the industry, something like 2008, it's not a black swan event. It's something that was probably overdue. Dot-com crash, same kind of thing. COVID, yes, black swan. Pearl Harbor, uh, obviously Twin Towers and 9/11 kind of thing. Those are black swan events. But we can just get in a situation, let's face it, $40 trillion in US debt. So I can put a picture up of the US government bonds, and that's important because this impacts all of your real estate thoughts, decisions, and planning over the somewhat near and intermediate term. So we have incredibly high debt, which is making it difficult for those who are interested in seeing lower interest rates come about. We have stocks like Nvidia, even though Apple, Nvidia, Microsoft have pulled back, the top seven, the Magnificent Seven, still represents over 30% of the entire S&P 500, which is ludicrous. And these stocks are so overvalued, you can't even see straight. So there are issues that aren't, I don't consider them black swanny, but there are certainly issues that we can say, hey, well, that's the reason the market can drop so much. And that's the catalyst that can start to push things lower. And I'm going to get to the catalyst in a minute. But again, the main reason that I believe we won't see something that dramatic, that drastic, is because of the guy in the White House. He knows that if he messes this up, they've tried to assassinate him 3 or 4 times. With a power change in Washington, they will not miss. So his life, I'm not speaking metaphorically, I'm speaking actually, that will actually probably take him out. He knows that, and he knows markets. So the importance of this is, you can't state the importance of it enough. You cannot state the importance of it enough. So give it enough time, and we will probably see markets start to come back around and maybe perhaps challenge these highs by the fall, if not a little bit sooner. However, let's understand though, these yellow lines on my charts, this is S&P 500. These were drawn in some time ago, well, not just yesterday, but we broke the 200-day moving average. First time that happened, and trading below it since the tariff tantrum last year. That's important. I know the 200-day moving average seems like a very simple thing. People kind of underrate it. They want to dismiss it, but it's one of the oldest and more reliable indicators for intermediate and longer term thoughts and action steps within the markets themselves. And so breaking below the 200-day, especially when you see consecutive volume runs like we've seen, and it barely stopped. It just kind of sliced on through it after it touched it for a few days. That I want to keep firmly in my mind. And as long as this is the case, Caleb and everybody else, as long as this market is trading below the 200-day moving average, I am not going to activate the 25% in cash that I have in my long-term portfolio and go long unless and until I see something else. And what I want to see is a selling climax. I want to see puke. I want to see blood. I want to see this market get clobbered. Okay, I want to see something dramatic. And the way I know that, down here I've got some RSIs, pretty simple stuff. You guys probably know what these are. If not, Just holler in, ask. I'll explain it to you. It's
Quick,
funny
quick, quick,
because these things.
quick question, Romulus.
Yeah, yeah, go ahead.
This is Nate. What would be your definition of value when it comes to the 400 day, the 200 day, and the 50 day?
Okay, so as an example of that, in a bull market, and we're talking S&P, not Nasdaq. Um, the in a good bull market, the S&P 500 should be 5 to 10% above the rising 200 day on a somewhat consistent basis. And I hope that makes sense. If it gets 15% or more above the 200 day moving average, just sell and short because you know that it's going to be pulling back. A bear market or a good correction or a strong correction, a powerful selling situation, that can get to more extremes. Why? Well, fear is a more powerful emotion than greed. People run from a problem faster than they run toward an opportunity. So, let's cook that in our minds. They run away from problems faster than they run toward an opportunity. Or we've all heard the phrase, stocks take the elevator down, the escalator up, right? So that same concept of distance from the 200-day moving average, expand it in a normal bear market situation where things are just kind of selling off 8 to 15% away. Extreme would be 20. So if the S&P price is 20% below the 200-day moving average, just buy, just start buying. And it doesn't matter what you buy, just buy. Okay, so those would be kind of value oriented concepts. 50 and the 400, I never use the 400-day moving average. The 50-day average, as an example, is just something I look at and want to know, is it respecting the 50 at this point, whether it's the index, individual stock, crypto, bonds, oil, whatever, or is it just kind of not paying attention to it? So for a while, during this chop fest from late October until start of the war, the S&P could care less about the 50, right? It was kind of cutting up and down through it. It didn't care. But if you rally back to the 50-day in the somewhat near term, so let's say it starts going up, Trump says whatever, he all of a sudden he and the top guys in Iran are golfing buddies and they're best friends, okay? Like some absurd thing like that. So stocks rally, oil drops a lot, interest rates are dropping, and over 5 or 6 days, the S&P gets up to the 50. I would sell, I would short right there because this is going to be a little bit of a lock situation right here. Okay. At least temporarily. Longer term, we don't know. Did that answer your question to some degree?
Yes, it does. Yes, it
Okay.
does. And so my next question, you had said 20% below the
Yep.
200 day. Where are we at now percentage wise below the 200 day? If you want to.
Just well, you can see the 200 dates, the red line, and it's at. I mean, I can do a quick math here. It's not far below it, so it's at 66.33. 66.33 is the 200 day, and price is 64.77 divided by 66.33. So it's about 2.3% below the 200-day moving average right now.
And you said 20% is when we need to be buying. Just start buying.
Yeah, that's just an indicator to tell you if nothing else is going on. And over the next 3 months, the S&P gets really smashed. It's
Gotcha.
one of those selling climactic type of events. And you look up, you're doing something and you show up for work, you look at the screen, you're like, wow, S&P down 3% today, down, 8% last 10 trading days. And look, it's 20% below the 200-day moving average. Oh, just start buying. You might not make money by the next day. You may not be making money 3 days later, but within 2 weeks, you'll have money in your pocket. Within 2 months, you'll be cashing up from something like that. Now, that may
Gotcha.
not be the end of the bear market, but it certainly will be a delicious little bounce. I'll tell you a funny story. Back in the dot-com crash, again, I've been doing this for a bit. I was trading millions through the dot-com crash. That's when my fund was running. And it was probably, I think it was May of '01 or '02, I forget. But I mean, tech stocks were getting killed. Amazon, Yahoo, that was still public. Uh, eBay was around back then, Microsoft, Intel, Dell Computer, all these big tech companies trading in the hundreds of dollars at their peaks and then trading in single digits when it was all done. But it was a period where maybe 2 months straight, things were really nasty. Like we're talking every third day, the S&P would drop 2%. Okay. And the rebounds were like a quarter of a percent. It was brutal, vicious. And then one day in May, one day, The NASDAQ went up 11.5% in a single day, like an entire year's worth of gains in one trading day. Did that spell the end of the bear market? Well, a lot of people thought so, but it didn't. The tech stocks kept getting smashed after that for many, many, many months. And the low of the period right before that big rebound was a distant memory within 2 or 3 months. You were looking up at it from a big distance. So just kind of things that can happen. Okay, these are the types of things that can happen when you are involved in the stock market, and the fear really gets in there, or the greed. I mean, the upside as well. I can remember dot-com mania buying a stock, a tech stock, on a Monday morning at $11, and by Friday I was selling it for 120. 5 days later, a 10 bagger in 5 days. So it goes both ways, right? Anyway, one of the things that I'll be looking for the ultimate low is a selling climax. So it doesn't have to be what we talked about a minute ago, where it could be a news-driven type of event that starts to bring the markets higher. What in that case, I'll start buying when we get above the 200-day, when we start to see the volume profile distinctly different than what we have seen all year. Because all this calendar year, we have seen distribution days, meaning red days with higher volume than prior day. You see, like there and there and there. There's only been a very few trading days this year where we've seen accumulation, where green was accompanied by a higher volume spike, like right here. So I want to see a lot more of that, not 1 or 2 days, but a lot more of that above the 200-day and beyond these downtrend lines right here. Okay, then I'm going to want to see the more speculative stuff. Whether you're into crypto or not, I do have a couple crypto. I have a Bitcoin and Ethereum ETFs in my retirement accounts. Whether you're into it or not, that's not the point. The point is, these are still very speculative areas of the market. And if they're healthy, if they're doing well, if they're really bouncing up, well, that's another sign. By the way, just as a side note, has anyone else noticed that Bitcoin is a series of higher highs and higher lows? I mean, it's not a raging uptrend, but the definition of an uptrend is higher highs and higher lows, right? That's in the textbook. And
Yeah, it looks like it.
it's very slight, like it's a very small kind of thing. And it's delicate because the last swing low is over here a few days ago and not far lower than what we're trading at now. But you talk about the 50-day average, you see how it broke that for the first time in a while, then turned back. The 50 is now leveling off and even turning up slightly. This is one of those signs that could be one of the first green shoots that the hectic selling nature of the stock market for the last several weeks might be turning in a different direction. So I'm watching Bitcoin for that sign very, very closely. And it's a time to watch. It's a time to watch. I trade futures too. Okay. And we're not going to be talking too much unless you guys want to talk about it, but I do trade futures. And in futures trading, you have to be extremely precise with entries, exits, decisions, and actions. And that has taught me a tremendous amount about all of my investing and trading activities and processes. And with the S&P 500, I don't want to buy at. I don't have to buy just because it's down 7 or 8% from its all-time highs. No reason to, because we all know it can go a hell of a lot lower. A hell of a lot lower. I don't have to take any action. I'm going to let the actions of others start to dictate what I do, and I'm going to react to what I see. And there's no reason to jump the gun on this stuff. No reason. So last summer, AI, right? NVIDIA, all-time highs. We're all buying Palantir, and we're buying even, Robinhood and some of the better fintechs. You guys could rattle off some of the names. I know that you were either watching them or maybe you were in them. Maybe you still have them now. It was all the rage, right? At some point, there will be a washout. At some point, it'll be time to buy those stocks again. But when? I mean, how many times have you seen NVIDIA false start for the last 8 months? I mean, look at this. This is now 8 months of garbage for NVIDIA. Garbage. And you don't want to be in this. You don't want to be sitting in this dead money. That's not proper. Plus, the way it's looking right now, this is looking like a topping formation that could get nasty. You want to know what nasty could look like in the big tech space? Take a look at Oracle. Okay? That's what that looks like. So I don't have to be the first one in. I don't have to jump at it. I don't have to go buy NVIDIA because it's such a popular stock still. until it starts to show me that it's ready to be bought. And that is by two ways: a selling climax where it really washes out, or price just turns, starts breaking above the moving averages, the trend lines, and the volume profiles change. And that's a pretty good summary of how I conduct myself. And that has been a tremendous help to me, short, intermediate, and longer term. And real quick, before we open up to more questions, the number one thought on everybody's mind is war, war, war. Keep going or end. What are we going to do? How are we going to know? Obviously, oil prices are a big signal for all this. However, you know what I noticed? Look at this. So oil prior to the war, hold on, let me get back to it. Okay, prior to the war, if you look at late last year, early January, like in this kind of neighborhood, look at this. This is a downtrend. It's putting in mostly lower lows and lower highs. And if we're right here, I'm thinking, all right, at some point, maybe not in the immediate future, but at some point, this looks like it's going into the low 50s, maybe even high $40 a barrel range. Because I mean, it got down to 55, didn't it? And then, of course, we know what happened after that. It went nuts. And it's going to be different going forward. I know there are some people who say, well, the war's over, so oil should drop all the way back to 60 and lower, and we're all good again. And I don't agree with that. This is a 200-week moving average, this red line right now. And I'm not so sure, no matter what happens on the war front, that we're going to see price get too much lower than that for quite some time. And what does that mean? Well, going from 95 or 100 down to 75 will certainly put a dampener on the inflation that we're all about to see. I mean, when was the last time you guys filled up your tank? In my town, Caleb, I filled up yesterday, 4.20 a gallon. 5 weeks ago, 2.70 a gallon.
Ain't that crazy, man?
So
That
that
is
that's
crazy.
inflation. That's inflation. And I'll go to Kroger, in 2 weeks, and I promise you, I will pay more for my basket of the normal things than I was paying 2 or 3 months ago. And then we're all going to see inflation very soon. Will it stick with us and be like it was in 01 and 2021 and 2022, where it was really high and it stayed like that for a long time? It just depends on the price of oil. I do believe oil is going to slowly start to drift lower over, it may not be tomorrow or next week, but over coming months, it will slowly drift lower. But I think it's going to have a problem getting below 75 a barrel, which means that inflation spikes for a short term, then it starts to cool off, but it's not going to really get under control the way some people believe it would or some people want it to become over the somewhat near and intermediate term. And that's something to think about. Here's interest rates. I promised that I would bring that up. So look at this. This is the U.S. 10-year. Obviously, everything kind of following along here. This is the number one bellwether. It's like the S&P 500 is for stocks around the world. You always want to pay attention to the 10-year. Everything else follows this. By the way, the U.S. 10-year, just as a funny little side note, has been trading um, since 1792. Since 1792. Amazing. So here it is, the highest level that it has been at since the middle of July. I mean, that's something. So what does that translate to? Mortgage rates. Caleb, you're a skilled, experienced professional in the real estate industry. Check the average mortgage rates today versus where they were 2 months ago.
Oh
And I know you
yeah,
do. This is a
definitely.
hypothetical,
Yeah.
right? I know you're doing that already. I know you're doing that all the time for your
Hmm.
people. But they're much higher than they were just a couple of months ago. So that impacts real estate. Okay, car loans and all else rates are interest rates, mortgage rates, loan rates, credit card rates are all higher than they were a couple of months ago. And this is up. This is up. This is just like the stock market. Here's a weekly look at the stock market. If you didn't know this was the S&P, I mean, I got to have a feeling that you guys would look at this and say, "Oh yeah, I'm not in a hurry to buy that." No reason to. No reason to be in a hurry to buy this. Okay, even if it goes up tomorrow, even if it goes up next week, to me, it's got to prove itself because we've seen a lot of false starts dating back to the end of October. And I for one, am not going to put my hard-earned dollars unless my hard-earned dollars are going to get some easy wind behind their backs. Make sense?
Hey, quick question about the 10-year, real quick. Just a real estate question, just a quick one. Um, I had read that I'm not in the real estate space, but I had read that when interest goes up, um, it's harder to get a loan, correct? But then when interest rates go down, people are raising the prices of their homes up. So where is the win-win for your average investor that wants to get a home? Anyone
Well,
can answer that.
that correlation that you just mentioned, interest rates going down, house prices going up, or the inverse of that, may not stand up to the test of 250 years of U.S. Housing and interest rate mortgage rate history. Because I mean, I was alive during the late 70s when interest rates and mortgage rates were going crazy to the upside, and so was residential real estate prices. They were going much higher. Together, they were both going higher. It was a really funny kind of situation. So they don't always have to be correlated there. But if interest rates go down, people can borrow money for less. The interest rate is nothing more than the cost of money. Okay. If the cost of something goes up, we all expect that that could have a dampening effect on demand, right? It's simple supply and demand curve. If the cost of something goes up, most likely, not guaranteed, but most likely, that will dampen demand. And if the cost of something goes down, that will most likely have an increased effect on demand. So the cost of money goes down. Yep, more people could be interested in buying houses. If more people are interested, that creates more demand. Demand leads to higher prices, right? So it's a self-fulfilling kind of prophecy there. But one thing I want you to look at, this is a basket of home building stock. So this isn't companies that are rehabbing or construction companies. These would be like the Pulte's, Davis Homes, MI Homes, Lennars, companies you guys know, but maybe you haven't thought of them, because you don't
Is
feel.
that a double top?
Yeah, yeah. So right, this is double toppy right here, right? 200 moving average. This is the weekly. I can move it to a daily as well and come back. Let me come back to it in my chart. Okay. So here we're back with it. I mean, this looks like a ski jump. This thing has fallen so dramatically. Okay. This is not good. I mean, the US economy is very involved with home building. And we do a lot of other things here, but home building is a big one, right? Home building is a really like home building in places like Germany, Italy, France, not nearly as impactful on their economies as it is in the US. Not nearly as much. This is a very American kind of a thing where everybody wants a new house and we're very into building homes all the time. So it has the ripple effect. I mean, look at this. Look how dramatic this drop is. That's severe. So this is telling us something. This is most likely giving us a signal to be, cautious overall. Here's Home Depot, not just related to the new home building, but the home ownership world. New 52-week low just a couple of days ago. And so I'll come back to the ITB and I'll shrink it, and then we'll look at it from a little bit of a longer perspective from the daily. And so this is almost a double top. If you kind of look at it, squint a little bit, and then you got that nice valley right there. And so we can just do a quick math. Let's call that 92. Let's do the lower high for the sake of being conservative, 115. So 15 and 8 is 23. And so we can take 23 down from 92. So we're talking $70. I mean, look, I'm still going down. Look how far I had to go to get to that target on that double top. I mean, doesn't that get you thinking, oh, okay, I'm going to be a little cautious here. Okay. Just a little bit cautious. Let this price prove itself. Let the price of the S&P, let the price of oil, and let the price of the interest rate market prove themselves to us before we start getting in there and again risking our hard-earned money in order to put an easy win behind our backs. Okay.
I got one more question. I don't know other people want to ask a question, but
Please.
um so if we see our debt at almost 40 trillion, we see credit, we see real estate like as you just showed, we see the VIX going crazy, oil up. Um and in your perspective, what happens next when everything is on edge like this? There isn't just one solution to fix
No, you're
there
right.
isn't one solution to fix the real estate. There isn't one solution to fix um,
Right.
inflation. In your
Right.
perspective, hypothetically, what happens next?
Well, I know what happens with me. I sit, I wait. That's what happens with me. I wait for the opportunities. Typically, typically, we have seen enough selling already from this late January high down
Facts.
to what we're seeing right now. We have seen enough selling to lead to the conclusion, historically speaking, over 200 years of stock market history and data, to suggest that this will be a selling climax finish, that this will not be just Trump coming out and saying, "Hey, we're all good," and the market goes up again, right? Like he did last spring, which is what happened. I mean, he basically just talked the market higher again. Okay, he probably doesn't have the ability to do that as easily as he did last year. And so what I see, the history suggests that we've seen enough selling, and what happens here is they get frustrated. They're waiting for these prices to go up, and they're not going up. They go up a bit, and they get smashed again. Then we want that throw in the towel kind of
Yeah.
activity. And by the way, a sun climax isn't just a single day event. I mean, it
Mm.
can be. Like COVID, it had about 3 or 4 selling climactic days, and they were brutal. 08, 09 had about 3 months of sun climatic periods. But the dot-com crash, that was 6, 7 months. 6 to 7 months of climatic periods before it was all done. So you don't even want to jump in just after you see the first day of it. Okay? Because you want to see the selling climax, and then you've got to see the response. What are the big money people doing? Because it's not you and me and the retail folks. It's the banks, the portfolio managers, the hedge funds, the pension funds, all around the world, not just in the US. What is their response to these lower prices? What is their answer? What are their actions that they're taking when they see these stocks get smashed? So you see a series of days, huge volume spikes, percentage losses like today, like a couple of days ago. You 1.5, 2, 3% days over the course of a week or two, big volume jumps. And then do they step in and start to answer? That's when we know we can jump in with them. Be with the trend of the institutions because the selling that I described to you, these distribution days, which have been piling up all year really, versus the very obvious lack of accumulation days, that is showing us that big money institutions, they're not following stocks higher during rally days and periods, but they are following them lower when they're going down. And that has to change. And I don't know
Mm.
when it's going to change, but a selling climax, that can certainly do the trick. It can certainly do the trick. And I salivate for that kind of day. I mean, like last year, I started buying heavy in late March and early April, not because I didn't know anything about what Trump was going to do or wasn't going to do. I didn't know. But we were dirt down. We had a couple of those selling climactic days, oversold indicators on everything. That's what's time to do some buying. And I did. And we need to see a couple of days like that before I'll jump in. Or, like I said, the reverse. These trend lines and moving averages are broken to the upside. Volume profiles start to change. Riskier assets they start to lead the way. And that's how I'll know I need to buy. And I didn't get my selling climax at those points, but I need to jump in because the big money trend is starting to turn upward. So,
Yeah. Yeah. And I know I said last one. So you see the RSI is at 27, 28. I think we had touched 14. I said RSI. The VIX. The VIX is at about
okay.
27, 28. We
Mhm.
had touched about what, 13 a while ago. So we're basically 100% from the bottom of the VIX. You see the fear and greed index. We're in extreme fear right now. And then you see that RSI on SPX. It's like, hmm,
Well,
is
here's
this
the
thing
VIX.
turning
Here's the
around soon
VIX.
or what?
Here's the VIX last year
Yeah.
in the tariff tantrum. At the end of March, it was at 16. 2 weeks later, it was at 60. And you're only at 27 now.
Do you think we could get that again?
Yeah, sure. Sure. COVID, it was in the 80s. Maybe I think it hit 85 in March of 2020 during COVID. And then like a month earlier, it was at 12 or 13. So it went from 12 or 13 to up to 85 in 3 weeks. Yeah,
Golly.
we are not in a fear environment right now.
You don't think so?
No, 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 no. I can't stress that enough. We are not in a fear environment right now. No. This is just, stocks sell off. There's a little war going on. Oil's a little higher. No, this is not a fear. And again, it
You
doesn't have to
saying
end that
this
way.
from, yeah, you're saying this from this amount of time of seeing the dot com and seeing the COVID and seeing the crash because you're
No,
like, this ain't no real deal crash. Like
no, not yet.
this, not yet. So I
Not
think
yet.
that's what he kind of means. I can see what you're saying from that point of view. Like this isn't a real deal crash. This is new for if you're, maybe 10 years old, 5 years old inside the market, you only
Right.
seen COVID, but
Yep.
we haven't really seen like, a trickle day of just months and months of bleeding,
Yeah,
you
and
know.
COVID was unique because, yeah, the S&P dropped 31 or 32% peak to trough, but it was 1 month. And
Yeah.
then and
Yeah.
then 3.5 months after the low hit like March 23rd or something. After that low hit, 3.5 months later, all the markets were at new all-time highs. That's unheard of.
So I'm glad you just brought that up. That was going to be my last point. That aren't you seeing these dips get bought up quicker than they used to back in the day?
Yeah, well, that's because we've been on this long bull run and people are conditioned to buy tech stocks, to buy Nvidia, to buy Amazon, to buy the S&P because the COVID situation, as nasty as that got, that just reinforced trends that were already in place since early 2009 anyway,
Gotcha.
because the dips were bought up, new highs were seen, maybe not always 3.5 months later. Sometimes it took several months after, but a bad situation, post early 2009, nothing really got bad. Like it just kept turning around and regrouping and going higher again. And again, I'm of the belief, the analytical belief, that we're not going to have a long drawn out multi-month 30 or 40% whack. I don't think that's going to be the case. But just in case, there's no reason for me to jump in there just because it's down 7 or 8%. There's no reason to. I want to see exactly what I described to you guys already before I put, more money to work. And I may do some buying, as an example, if like a year ago, I bought Pfizer, stock was down almost to 21 bucks. When I bought it, I mean it's higher now, but when I bought it, this was paying a 10% dividend.
Mm,
Fourth highest, the fourth biggest pharma company in the world, so low was paying a 10% dividend. And now, I mean, if you buy it now, the dividend rate isn't near that. But and I get to sell covered calls not every month. I get to sell calls on this sucker every week. Every week I'm selling calls on this guy. And I'm just keeping that
collecting
money.
premium, right? Collecting that premium.
I'm just
Yeah.
collecting that premium. It's free money.
Yeah.
It's free money. I mean, it's the only free money I know of on planet Earth. So I take that free money. I reinvest the dividends. I reinvest the call premiums, and so I get more shares all the time. But that's a disconnect. That if I saw a great stock, a old blue chip company like a Ford or a Verizon or a Pfizer, that I know is not going to really get dented economically, that they're not going to cut the dividend long term, if it smashes and the dividend rate is over 8% and I could sell weekly calls, I'll just buy a little of it anyway. And then I'll just buy more of it if the market keeps getting, worse and worse, kind of
Gotcha.
thing, right? Because these companies we're talking about have been around for decades, if not longer. I mean, some of these companies, like Ford, 120 something years. So that's a little bit different. But yeah, but in my retirement account stuff, in my longer term portfolio, these are the stocks that they're the bulwark of what I own. The mainstay, big blue chippies that have huge dividends, and I can sell covered calls on them every week.
Gotcha. Gotcha. Hey, I'm gonna open it up. Anybody got any questions for him before I get to firing them off?
Yeah, I was gonna ask. I know historically April is one of the better months for the market. What do you see for this April coming up?
Yeah, it's crazy because over the past 45 years, almost 46 now, I guess, dating back to 1980, November and April are the two strongest months, the two most bullish months, with April actually being a little bit more than November.
Mm,
It has beaten November by a couple of basis points. But last year, April was pretty funny because we had the
Yeah.
tariff tantrum. But by the end
Right.
of the month, by the end of April, the
Hmm.
market was only down about a 0.5%.
Right.
Even though if you ask people because of how crazy it was along the way, because it
Hmm.
got wild. Last April, April of 25, was the second most volatile month in NQ futures history, dating back to 1972.
Wow.
Crazy, yeah. But so that, yeah, that's another reason why, at least in the shorter term, just because the stocks are down, I'm not looking to, go whole short or sell a bunch of stuff because April is typically strong, and we are at least on a short-term basis, not intermediate or longer term, but at least on a short-term basis, we're mildly oversold. Not tremendously, but we're mildly oversold. So yeah, I'm looking for maybe some bounces, like swing trading stuff, short-term stuff. There's some oversold situations out there that I would take for a couple of days or a couple of week long trades.
Yeah.
I have two questions
Please.
regarding real estate and the stock market. So my first question, I'm actually regard to the stock market. What do you like investing in long term? Like, what's something that you dollar cost averaging?
So like I mentioned, it's big blue chip companies that have been around for decades, if not longer. Take a Ford an example. I first started buying this 3 years ago. It was in the eights. The dividend rate for me there is almost 8%, just under 8%, because I paid such a low price. And so again, a big blue chip company, been around decades or longer, solid dividend with very little or no risk that they'll cut it no matter how bad things get. GM went bankrupt in '09. Ford never even cut their dividend, as an example. So, and I'll reinvest in these kind of companies and, dollar cost average or whatever I need to do. So Verizon, Pfizer, Ford are three examples of that. And that's a long-term type of a thing. For more speculative, because I do want something in my retirement account that's got a chance to go. I want something that could put on some gas. So I do have a little bit of crypto. I've got the
Okay.
BITO, which is the Bitcoin ETF, and I have the EETH, which is the Ethereum ETF. And then I've got a bunch of cash. So if you give me a nice selling climax, you give me a week or two of really of people puking it up, and then what will I do at that point? I'll just take some. I'll buy SPXL, which is triple long the S&P,
Peace.
and I'll just sit back and smile all the way to the bank.
Jeez. And I don't want to cut you off, Tab. I want you to finish your question, but I want to stay on this real quick. Do you
Sure.
think that the SBXL buying the shares will give you a stronger and safer return than getting the options on SPY long term?
It depends on how long you own it. It depends on the deterioration. It depends on your strike. You leap. That's fine too. I mean, you can get calls if they're leaps in that
Gotcha.
case because you get a selling climax situation and you just don't know. Oh, is this the final day? Is this the final price? You don't know. I mean, you look at COVID. Look at the charts of COVID period that month. There were times when it was down 2 or 3 days in a row when the cumulative return of the cumulative loss over 3 days was like 12%, which is a real whacking. And then it bounced in one day 6 or 7%, and you're like, oh, that's the low. And then a week later, it hit a new low. But the whole period in late March was putting in a major low, wasn't it? The whole period. So if you bought leaps in March of 2020 that were expiring in March of 21, or if you bought SPXL into that low of March in 2020, I don't know if it makes that much of a difference.
Gotcha.
I think you're doing fine either way. I think you're doing fine either way. So I think somebody had a real estate question.
Oh yeah, this is Tevin, by the way.
Yeah, please.
Yeah, as far as real estate, because you said you manage over 50 million, right? So in the real estate field, the investors that you're dealing with, are they investing more so overseas or in the States? And if so, where are these investment opportunities? Like what states, what cities?
Yeah. So
If
again, it's real estate. It's two things going on right now. It's very geographically oriented. It's not a broad push. If you look at the United States, broadly speaking, residential real estate prices, so home prices, are flat over the last several months, flat or down 1% from a year ago. I mean, nothing major, right? It's not '08.
Yeah.
It's not as if Las Vegas is down 50%, Tampa down 50%. That's not happening, right? But Austin, Texas is getting whacked. and parts of Phoenix are getting whacked, and parts of Tampa are getting whacked right now. But across America, the whole country, prices are flat or down about 1% from the last 6 or 12 months. So really, broadly speaking, not a big deal. Although you didn't get any appreciation either.
Mm,
But in my city, in Indianapolis, Indiana, we still attract a lot of outside investors, and these are international, which would a lot of them would be based in Middle Eastern countries like Qatar and Kuwait, UAE, those types of areas, and the coastal regions,
hmm.
because you can sell a house in California, 1,000 square foot house for $1 million, and you can come to Carmel, Indiana, and you're like, wow, I can buy a mansion for 600 grand and still have 400,000 left over for my freaking retirement, right?
Yeah,
And that's how it is. But Indianapolis, Indiana, St. Louis, Missouri, probably Columbus, Ohio,
yeah. I've been
some of
Ohio.
these more
Mhm.
foundationally basic Midwestern cities are
Yep.
still going to be attractive as long as you can buy it right. If you buy it a little bit off, even in our city, you're going to sit for a while because things have certainly slowed even in the best areas of my city over the past 6 months.
Mm. You mentioned Austin, Texas. I definitely did some research. I saw that Austin, Texas does have a lot of great opportunities as well as Columbus, Ohio, Cleveland. A lot of investors, like you mentioned, who have real estate in California, they're actually moving
They're
their real
going to
estate
smaller
into
markets.
Yep.
that 100%. And it makes more sense. You got more doors, more opportunity, for cash flow. So it makes it 100% sense.
Yeah.
Yeah, that's why I ain't gonna lie. They've been trying to get me down there in Atlanta, and I'm telling them, I make the same, if not more, in the Midwest, and I don't have to put up as much capital than if
Right.
I was to get down there into Atlanta. Atlanta costs more and more competition, and different strategies. So the Midwest is definitely a hot. The Carolinas are hot. I would stay away from the Sun Belt, and then also the Gulf Coast. I would dabble in Dallas, but Austin also. But those insurance rates are also that's affecting everywhere, but insurance rates along that water, they're double charging. So that's the hard part.
Yeah, we don't have water. We don't have
Oh, my bad.
earthquakes. We don't have hurricanes. We just have a lot of flat open land, I guess.
Yeah,
That's what
we got a lot of corn too.
we do have a lot of corn around Indiana, but so
So Caleb,
you
what
do
do you
have
like?
you have those kind of opportunities here around. But
Um,
again, it really comes down to you must buy correctly. Okay. You can't be in a rush. You have to have um, that willpower and that discipline to say no a lot of times. A lot of times. And even if you walk away and say no and you turn around and you see somebody, writing the check and signing the paperwork and you think, "Oh man, that could have been me." I had the money, I had the deal all lined up, I had everything right, and I could have been buying that house or that strip mall or that duplex or that, old warehouse, right? I could have been buying that. No, if you are not 100% sure that you're buying it right and you have the equity already, just don't do it because it's coming. All right. I mean, like I said, if this market really is heading for more of a selling climax finish than it is a news related push up, kind of lazy push to the upside where we didn't get the selling climax, then it's coming. All that good stuff is coming. All that good stuff will be on the way. And if you're spending now, in 3 months or 6 months or a year or whatever, when it really happens and you don't have the money, then the best deals are not going to be for you. They're going to be for somebody else.
Sticking with real estate, do you think Trump's push to keep institutional investors from purchasing single family homes, do you think that pushes the needle at all, one way or the other?
I don't think so because a lot of those guys are done buying anyway.
Mm.
I mean, Blackstone, they say that they haven't been buying in bulk in a while. Why? Prices are higher.
Yeah,
I mean, prices might be flat or down 1% from the past 6 or 12 months, but they're up 40% from 2019.
for sure.
I mean, these guys aren't, I mean, think about it. You don't
Wow.
get to be worth $5 billion or $10 billion because you buy high and try to sell higher.
Sure.
They bought in 10, 11, 12, 13, and 14. And they're all Trump's friends, right?
Sure,
They
sure.
are.
Yeah, yeah.
Don't you? If they really had a problem with what Trump was about to do with limiting their buying activities, I have a feeling that he wouldn't be trying to limit their buying
Yeah, yeah.
activities.
Sure,
Yo,
sure.
just to that point, I'm glad you just said that, Romulus and Malcolm. Because when the stat came out, I think 2 months ago, we had talked about on our call that they were limiting I think it was the single family homes, wasn't that,
Yep.
Malcolm? The
Yeah.
single
Uh-huh.
family home purchases from the big dogs. And then you get a lot of people like, thank God, finally. And then you sit back and think about what you just said. Why would they be buying right now
Right
anyway?
now. Yeah, yeah.
They were buying years ago, 10 years ago.
Yeah.
Hmm.
So I think it's just smoke and mirrors when Trump does that. Now I'm starting to I
Yep.
feel like I'm starting to get a hang of the way he moves. Like when he says, "Hey, we're at it with Iran and blah blah blah." It's like, what's really the play at hand? That's what he got you thinking now. Same thing with the single family homes. It's we're putting a ban on how many single family homes that BlackRock or Vanguard can buy. And then you're like, yo, they haven't been buying anyway. Oh,
Right.
this guy's crazy.
Yeah. So, hey, fellas, I've had a blast. I hope to, like I said, get the opportunity to join you guys as often as you'll have me. I get going. I'm on Eastern
Yes,
time,
sir,
and
brother.
this
I
this war
appreciate it.
this war has been adding a little level of busyness to my futures trading activities,
Mm.
What
which
y'all
means
on,
just
rich niggas up here?
Do you
been making
trade the
more.
London? What are
No,
you
I
trading
don't. No,
now? Or are you
I don't
trading
trade
the
the London,
open?
but like even when I'm up at 6 in the morning, like
Yeah,
typically
those are the good plays.
typically
Them
there
really be
hasn't
the
been,
one.
I typically wouldn't trade at 6 a.m., but since the war started a month ago, it's been good.
Yeah,
So
it's been great. It's been great.
yeah, so I have been trading more often. I have been making more money, but if volatility starts to go back to normal in 2 or 3 months, I don't want to look back and think, man, I should have been trading when it was there, because you can't bring it back. I can't bring it back. It's not up to me. So I have
Would
been
you
this
do an
year.
option call on spot for 2 years from now to 700 or a
No,
year
no, no,
out?
no, no, no.
No,
Anything like that, I would do. I would just wait for the two
wait
ways I
for a little
described
bit
to you.
longer.
Yeah, I don't do it
Okay.
just to do it. I mean, I don't just because it's down 7.5%. I don't just buy things. I mean,
Okay.
it's not how I've ever operated.
Just
And one of the,
stay.
you
So the
know,
biggest thing of advice, Romulus, where you get out of here is stick to the code and the rules. It don't matter even if the stock drops a certain percent, wait until the technicals actually present themselves. Wait
yep,
till the levels, wait till the actual setup is all the way there.
yep,
Okay.
that's it.
Because
That's
that's
it.
what we've been wondering about Microsoft. But we'll get you up out of here, big dog. I appreciate you,
Yeah.
man. Thank you for the ecosystem. I know Nate was wonderful to have you, man. So,
Hey,
uh,
thank you guys. Like I said, I want to be back. And if when I come back, we could talk about Microsoft because it's a stock that I have been trading, like on a swing basis, and it has been good to me and my group. Everybody have a wonderful night. Enjoy your
Likewise.
weekend, and I look forward to
Nah,
seeing
yeah,
everybody
you as
again
well.
soon.
Thank you.
All right.
Thank you,
Thanks
brother.
again.
We see you soon,
I
man.
appreciate
all
that.
right, big
Bye.
dog.
Nah, Nate definitely drop his tag for sure.
Did he
Most
cook?
def.
Did he cook?
Yeah, he
Nah,
did his,
he cooked up.
but
He
definitely
cooked
gotta
up.
have him
But
back
hedge
on.
fund, that's
Yeah,
fire. Shit,
yeah, we
Nate.
gotta have him back on. Hey, Tev and Keys, before we get out of here, and Malcolm, I definitely want y'all to what's going on with this real estate stuff, man? Like,
Hey, you want to know what's so crazy? I was just,
and
when I
Niger
just
too.
go bro, I was just at this meetup, bro, and we were talking about this. And so a lot of people, and we were talking about this in my class, a lot of people don't understand. And my mentor, he used to always tell me this. He'd be like, well, I ain't really tripping. Pay attention to the 10 year. As long as we don't get up to five on the 10 year, we good. So when money is cheap, right? So when the interest rate on the 10-year is cheap, people hide their assets inside of real estate. When that is expensive, they take their money and hide their money inside of the bonds. So when bond
Mm-hmm.
yields are high, they start withdrawing their stuff and start putting it into real estate. So right now, bro, all of the big dogs, think about it, it's a triple effect. We got the 10 years high, we got the bill that just passed on
Yeah.
top of,
Oil,
so that
crazy.
oil's crazy. So the consumer, so just those three things. We got the federal, we got an actual government policy, and then we have a consumer item that is necessary that is through the roof right now. So until two of those things go away, we're going to see higher interest rates because they want to take money. And I don't know really what's going on and why they're trying to take so much money out of the market. Not really making a lot of sense, but I do think that this is, um, I do think that they doing this on purpose.
I do too, bro. For a while, I'm like, man, Trump need to turn this thing around, but then I don't know, man. And then I seen
Because
him.
think about it, what he just said, the inflation aspect. So from an inflation
Mm-hmm.
aspect, all right, we just seen this work during COVID. Ain't nobody complaining. We drove the prices up and people got adjusted to it. Housing prices went up, people start paying rent. That was higher. Everybody was complaining for a second, but then they got used to it. So let's go ahead and try this again. So
Mm,
then think about it like this. All of these companies are now, why do you think they just hit Meta with that lawsuit and actually passed it to win? Like they don't want this full plan to be able to be rolled out. They already know what's going on. Meta is trying to make it. Think about this. When Elon said that everybody is getting paid now or trying to do content on Facebook or really on Facebook, I see that a lot now because now you can monetize just by making posts and people commenting on your stuff. So look at that trickle
Yeah.
down effect and how that is working. When Elon said that everybody's not gonna have a job. You're gonna choose if you want to work or not. Yes, that plan in effect, bro, is coming in full throttle. So
to tell what
I
Tom the robots too.
oh
Yeah.
yeah. Think about it, bro.
And
It's
the single,
tied in the robots.
yeah, and that single family comment too. It's funny because it's like, who's buying the single family too? Like like if you look at the economy, like no one, you just buying a single family home, you're buying into a liability. Like it was mentioned, they bought these properties years ago, but investment properties, like the first foresight should be, how can I make money on this property,
Yep. When you
right?
first buy
And
your
then,
first crib. Yep.
exactly, and then getting into different house hacking financial systems, like buying notes when you have cash on the side just laying around, and literally doing what these banks do, like converting into the bully system. I can't really give you a definition of the bully system, but do your own due diligence, look it up. But the bully system is how banks are making their money. So it's like, if you're able to operate like a bank, if you are able to be a well-rounded entrepreneur, we have no choice now in this day and age. You have to be a well-rounded entrepreneur, because you can't do two, three different jobs. First off, that's taking away your time, right? And it's taking away your creative ability. And on top of that, the minimum wage is not gonna get you by. And then on top of that, you can't even find a job on Indeed with these apps. A lot of people are posting fake jobs,
Yes.
or
Yep.
right?
I've been getting them
Yeah,
calls, bro. They like, bro,
big
I told
jobs.
you earlier that 100 applications. I'm like, bro, you put 100 applications in, you ain't get one job. They like, bro, it's like something's weird going on. They not even giving me a call. I'm like, yo,
Yeah, I was about to say not even a call.
They don't want, bro. Think about it. They want everybody to
especially if
be
you put a black
entrepreneurs.
African on your joint.
You got a line, just
I'll put
you
other.
got,
I'm putting other or alien on my
On
shit.
everything. I put other. I
yo,
put
there,
other, and my
yo,
name is Caleb, nigga. you
Yeah,
go, you
people
gonna
really
hear me
putting
over
that
the
they white and
phone.
shit.
Hey, nigga, gonna hear me over the phone. Like, see me in person, be shocked in a motherfucker.
You're
Hell
not
yeah,
Jake.
I got you.
You're not Chad. That's
I
how
got,
you put it
I
as a
got you,
kid.
Chad.
You're not Chad.
They go,
Nah, but it's
they
real.
gonna ask your ass, are you here to mop up the place? You be like, nah, I'm here to
Hey,
work.
that's what they say. I'm here to
Nah,
work.
nah.
Nah.
Wrong place, buddy.
For real. That's why
Yeah, but
relationships are so important.
real estate folks, well, just everybody. I think I really found the solution, which has been a solution that has been around, but we don't know it on the younger level. But see, this is why I say going to these meetings and going to these networking events are very, very key and superb, bro. Because inside of this meeting, this guy Daniel Pollitt, he wrote the missing middle housing. So basically, he talks about how the middle class is being wiped out and how he has reached the reason why they're being wiped out is because the zoning and the zoning structures, which when you really break it all the way down, it really does make a lot of sense. They make it so hard for people to build multiple different properties. I mean, different units on one property. So which has caused the housing shortage, which ultimately houses, price of houses. So how they explained it is that we have a housing crisis, but we have a supply of houses that has doubled, but our income has stayed the same. So yes, we are solving the issue slowly by building double the X amount of houses, and we're in the shortage, but people's salary is still unchanged. So what this middle housing is, he has a specific architecture and product, like, and he goes in and he works with the municipalities and changes the zoning and figure out like different ways. Like I'm gonna drop it in the group chat so everybody can check it out. But that is one thing that I would say going and being a part of this organization, game changing. Like this is the gym. I'm like, bro, you shouldn't have taught me like because I'm gonna go develop this everywhere. You know what I'm saying?
Mhm.
Because these neighborhoods that's talking about we're having problem with housing and problem with bro, we're gonna bring these type of units. Bro, they got 550, 650 square feet. They got some 350. Think about the workers, think about people that can't afford it, that solves it. So then it's like a home suite. So yeah, it ain't no big old house and all that stuff, but you got your kitchen, your shower, everything that you essentially need. And that makes it budget friendly. You can charge $800-900 for $700-800 for those units and put 200 units and still be able to make back. And they got a grill area, a little common area to come out. And then some of this design, he basically in the middle, he forces different economic groups to live together regardless. So he'll have some 2 units, then have a 4 unit, then he might have a five, a two, one, but they're all in this type of neighborhood and set up a certain type of way. So then everybody feels like it's a community, it's walkability, it's stuff that goes together. It's a clubhouse to be able to have that. It has a pool. Like, so a lot of this stuff matters when it comes to the zoning, which if you're not in real estate, zoning is what they tell you that you can build on the property. So most lots are zoned for only a single family house. But we know with technology, as we've been built, the zoning laws were made during the first camera, which I just found out today. So it's over 115 years old. I think the camera was made in like 1915 or something like that, or probably even older than
Okay, so
that.
you got all this information when you went to just be in
Yeah.
rooms.
Missing.
In these
Yeah,
rooms.
that missing. Yeah, that missing. That look them up, drop them on LinkedIn. That's what I'm gonna do it right now. Let me see here. I got his business card
Yeah,
and everything. So if y'all need it, bro, here
that's
we
fire,
go.
bro. And I'm glad Keys just said that, bro, because when we came up with the ecosystem, man, that was the idea after InvestFest. The idea was being able to become great in your lane, right? Being great, being knowledgeable in your lane, and bringing that knowledge back to a brotherhood, to a community family where we can all share ideas with each other. And I'm not in the same rooms Keys is in, right? I'm not in the same room Malcolm is in. Keys not in the same room KB is in. You feel me? So I feel like just with that
Bro,
concept of being able to share that information, we in the beginning stages of building something amazing, bro. Like I didn't know that. Nothing that Keys just said, didn't know anything, bro. What he just said, bro.
bro,
And
let
that's
me
just
tell you
wow.
like this too, Nate. He made it so people that didn't have no cars, he made it a no car community and it still worked out. So you didn't have to have a car. So basically, if you broke and you trying to make it in life, this makes sure that you make it. So you don't gotta have a car. There's still a grocery store that you able to go get fresh groceries and stuff like that at. There's still a market that you can go. There's still a restaurant that you can go. And then he also made it that people could still live if they only had one car. So
Mm,
this is written, bro. And that's game changing. That's next
yeah.
level, bro. That means you can go anywhere and implement this, even in Africa. Think about that in Africa. You build these small communities like that
Excellent
instantly.
information, man. If we put the right information together, bro, it's over with, man. But I want to let y'all go, man. I know the games is on, man. I know it's a late night, especially on the East Coast. What is it, 10 something over there now, right? Or nine something?
Yeah.
Yeah.
It's nine my way. So yeah, I'm about to let y'all get out of here, man. Let's keep playing the
All
game.
right, y'all.
Hey,
Sir.
green days, red days, green weeks, red weeks. Let's keep going, bro. The ones that stay here the longest are the ones that are going to win. He said, fuck them games. They got NIL money.
On my mama. On my
That's all I
mama.
can
And
tell
then we
you, dog.
getting better. While
Yeah,
they getting better,
No
we
money
getting
watch
better.
entertainment.
I
Or
love
ain't. I like what Myron Golden said. He said that's not your team. The team you rooting for is not your team. They don't know
Right.
you. Team is
That's real.
it's family. It's the inner circle.
it.
Making
That's your
money
team.
doing what they doing.
That's our team. That's our team. So, hey, man,
Yeah.
um this is the last end of the first quarter of
Hmm.
2026. Before I let everybody go, anybody just want to kind of give just a recap, not the how it went, but what's a sentence that'll wrap up how your first quarter went? I'm gonna just let everybody go and then we gonna get off here. How you feel like your first quarter went? You can be honest.
Really, it's just been like a patient waiting game for my first quarter. Really started off strong, and then you see the market sentiment, and you just gotta have some discipline. That's my first quarter.
I took a KB's S&P play, and that shit. I'm looking at the market. I'm like, damn, this shit look good. And then that shit was chopping up. I sold. Then you see today, shit touched 647. I'm like, man, I could have been up some fucking dollars.
Yeah.
But I love it, man. I love the process.
How your first quarter went, Tev?
Uh, tr- First quarter took some L's. But I also understand too. It's just like KB said, just being patient. Not forcing yourself to see something that's not there. I was
Mm,
doing that on a lot of the L's that I took. I was forcing myself because I'm thinking, yo, this shit looks good here and there, but I didn't check all my confirmation boxes, and that's where I took L's, and that's why I'm just like, you know what? It's me that has to be better. It's not. It's
Hmm.
not the market. So I don't even get tight when I take those L's.
No,
yo,
that's a good word.
that's fire, dog. That's fire.
Yeah.
It's crazy. Before I let you go, Malcolm, hearing you say you messed up in the midnet,
Mhm.
it just does something for your brothers and your sisters around you to let you know, like, bro, you human, bro. Like,
Hmm.
I messed up too. I took a
Hmm.
couple L's too. You know what I'm saying? So appreciate you for saying that, Tiff.
Nah,
Yeah, for
most
sure. Yeah, I mean the cosign tab. I mean that was definitely me in January for sure. I think just doing a little too much. Was pretty intentional about correcting that in February and certainly in March for sure. So I think just like you said, I think being honest about those mistakes or the way you can be better and actually doing something about it.
Yeah,
Yeah.
I think the same thing, brother. I will definitely do a test the eye and being patient and letting the plays cook. That's the
Hmm.
most That's the most important thing that I've learned from this quarter. Letting the plays cook.
Mm,
A play can be down. You just gotta let it cook. You have to be patient. If you got time, define. And I think another thing is having that key level when to buy more, right? And being able to navigate through this market with a sound mind on not just buying anything, right? Or buying stuff that isn't good, right? So
Or isn't in the momentum right now? Because
yeah, or isn't the
a prime
momentum
example, people buying Nvidia, like he said, great company. Nvidia ain't moved,
For
but
real.
like he said, called SanDisk, WDC, GLW, COHR. These the companies that's moving. So, nah, he got a point with that too, bro. Anybody else want to how their first quarter went before we get off here? Anybody else?
All I wanted to add was that, when you lose money in the market, just think about every day you leave the house, you losing money. So like when you losing the money on
yeah,
when you're taking a risk for a reward, that's something that's way different. That's something that 95% of the population doesn't understand. When
for
somebody
sure.
asks you, you're in the market, don't you lose money? You just ask them the same question. When you leave your house, don't you lose money?
It's a
Right?
fact.
I'm losing money by taking a risk and applying the knowledge. So we should never ever look at it as a loss and just like you said, just taking self accountability and saying, look, I just got to get better. It's not the market, it's not the news. People are making money.
For
I lost
sure.
money today,
Hmm.
right? So it's a double perspective.
No, that's a good word.
Love it, bro. Love it, man. And I'll just probably go last since I don't know if anybody else want to say something. But my first quarter was just back to what KB said, learning, bro. Patience.
Mhm.
Always continue to learn. Um, I feel like I never want to get to a point where I feel like I know it all. Once I feel like I know it all, I've hit my peak. And once you hit your peak, just like that stock, you going down. You feel me? So learning, bro. Continue to learn, continue to grow, continuing to build, and just trying to keep that right mindset. It's so much going on in the world that is trying to pull your mind in so many different directions that finding basically your foundation to keep you focused. That's kind of what I've been focused on. I just had a conversation this past week where um you can be going so hard, but if you're not rested or taking care of your mental, you can be going like really hard, nowhere, really fast, if that makes sense. So, direction is way more important than speed. Like I said, you can be going really fast to a place that you don't really want to go, but direction, getting those coordinates right, getting that needle right, man, and just aiming into the right direction, man. And I think that's what we're doing. First quarter is over with. We finishing it now. What is it? The 2026. So next time we talk, it'll be April. It'll be April. And then we'll be a few months away from Invest Fest, dog. That is crazy, man. So let's just keep playing the game, buying our plays out with Tom. Like the three strategies that I said a while ago. Buy them on a deep discount, put Tom on them, and buy a quality company. 9 times out of 10, you're gonna be all right. Meta's on sale, Microsoft's on sale, Tesla's on sale, Nvidia's in the 170s. I think you need to go down a little bit lower. And then if Nvidia goes down a little bit lower, what does that say about the rest of the market? What does that say about the chip sector? Um, just scary, man. Scary times that we in. Labor market bad, um, debt crazy, oil up, groceries up, can't get a job, inflation insane, interest rates getting back high,
Gas prices.
gas prices. Um, man, man, and robots coming, AI coming to take our jobs, man.
It's
You know,
real
we in crazy times right now, but I'm just glad we doing it together, bro.
for
We
sure.
experiencing this thing together. So
Definitely.
For sure.
you feel me? So all right, man. I'm about to let y'all go. I'm about to go get some food and we'll get a chat, man.
All
Great.
right, family.
Love
Love.
family.
Take care.
Love. Peace out.